Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, October 4th, 2019. So we finally have those weekly candle closes I was waiting to see this week, and for the most part, they're indeterminable. Here's the thing. We broke down, as I mentioned, we broke down last week below the trend lines on mainly QQQ and XLK, which I'm watching because SPY already broke down a while ago. Broke down below those December 24th uptrend lines. And as I said earlier last week, we broke down, but we weren't very far below. Ideally, if you want a clear sell signal, you want to see a solid close below and then confirmation. So we had the potential. This week certainly started out good early on. What happened is we hit those key 40-week moving averages. As I said, you have to see those go. The buyers step in usually on the first tag of those levels, even back there in the last meltdown and or the correction, I should say, in last quarter. We took it out intra-week, but then rallied back to close it. Tested again the following week, a perfect test, closed above it, and it was once that level went. Once the 40-week went, you can see a lot of successful defenses on it before. Once it went, we rallied back to it, failed. Rallied intra-week. You see a skinny part. That's an intra-week move. The candlestick shadow closed right on it. Couldn't regain it. Failed, and every other attempt intra-week was smacked down. And every single week since we closed below it, we tested it, and then finally, when the market realized it couldn't get back above there, it dumped at the end. And since then, it's held here. We had, again, as I talk about, these aren't exact zero levels where you zero into the nearest penny on QQQ, 200-point security. Slight marginal close below next week. It was able to hold it, so that's a successful defense, and so far another one right here. However, we did break down last week. Although we didn't have a very solid and impulsive candle, big red candle like this that closed below, we traded below throughout most of the week, and we closed just, I'm going to say, for all intents and purposes on it. Now you can look at the candle and say yes, it's a little below it, and we can pull it down. We can pull the trend line like this. That's actually a better fit. Come in perfectly on the bottom of these candles here. Either way, whether we closed on it or slightly below it, we're too close in proximity. So it's really what I call an indeterminable candle. We can't really extract too much from here. But if anything, more bearish than bullish because we are below the trend line. We were slightly below it last week. We are below it this week. And so if I want to go, be purist on this chart, then I'm going to say this is a breakdown last week, followed by a back test this week, and that's it. We'll leave it there. Sometimes you back test and fail. Sometimes you back test for a few weeks when you break a trend line, and sometimes you recover. So that's it. To me, it's pretty easy on the weekly chart here. You have to, the QQQ, to successfully hold this trend line and rally and put in that marginal new high, which is still only, nothing has changed now for weeks. That's still, if we put in that marginal new high, we're only talking about 4 to 5, 6% or so from where we close this week right now. And that would again just put us in the sweet spot of this wedge. We kind of broke down a little early this breakdown. Doesn't mean we can't go down, but the sweet spot, what I'm referring to, is when you start getting here to about 70 to 80% of the apex of the wedge. That's where wedges often break down. So we'll watch that. And again, 191. So let's look at the daily chart. Well, before we move on to weeklies, let's look at XLK. Same story. And remember, the charts are going to be similar. Breakdown last week, but not by a wide margin. Like I said, it was close enough that you'd want to see follow through. And then we rallied back. We had potential. We moved down, but we closed right about on a hair below the trend line. So again, to be continued next week. And what I mean by follow through, other than a big red candle like last October, when you had the breakdown, you want to see that confirming red candle, and that's what you had right there, and that's what pretty much sealed the deal on that breakdown there. And so far, we don't have a confirming candle on the weekly, so to be continued next week. All right, let's look at daily charts on these, and then a couple things I want to point out on the 60-minute charts. I want to show you something on the VIX, and we'll wrap this one up. So there it is. This is the the secondary or benefit of the doubt trend line, and so now you can see it a little more clearly here. What happened intra-week? We had a breakdown. It was impulsive. We rallied, hit that 200-day moving average. It's the same as the 40-week I just covered. When you're on a weekly chart, it's a 40-week EMA. On a daily, it's a 200-day or 200-period EMA. Breakdown and a rally back to back test the trend line from below. And on XLK, breakdown, rally back to close right on that BOD, or benefit of the doubt, that secondary trend line I have coming off there. SPY, show you a couple boards. There's the a stretched trend line here from December 24th, catching the most recent lows. We'll call it the benefit of the doubt trend line. Same thing, breakdown, kiss the 200, reverse, back test. Also right at the top of the trading range there. So it is, I'll say this, it's it's a little surprising. It's certainly not what I was expecting to see us rally all the way back to, since we got so close to the bottom of that trading range, but we're still in it. We're at the very top of the August trading range. So we'll look at that on the 60-minute charts in a second. Let me show a couple other boards here. There's one trend line to watch on SPY that was taken out and recovered. Let's see on QQQ. Same thing. You can see the back test, breakdown and back test. All right, let's look at the 60-minute charts, and we'll look at VIX and one other thing. And all right, so this kind of shows you the bigger picture. And remember, here's those trading ranges back from August. The high on that was around, a couple little punches above it, but around this 189.40 level. So that's we're still within there. We made a round trip all the way back down to close to the bottom. You remember, once we had that overshoot, we had a few reactions there. We hit that the other day. So what I've done here is color-coded probably the most significant levels on QQQ. And let me clean this one up. I just posted on the site, rightsideofthechart.com, before the close, and I had this line a little loose there. This is now, I said if we get a reaction, and we closed on it, so really want to see a pullback on Monday. That would give us a third confirming reaction off this trend line. What I mean by that is, any 2 points I like to say can be connected at random. So I like to see 3 distinct reactions on a trend line in order to validate it. So there's 1, 2, and we'll just see where we go. We pop up Monday. We're going to be at the top of the trading range, potential to take it out. And if they took this thing all the way down that close and run all the way through there, more power to the bulls. They deserve to take this thing back above the trend line that I just showed you on the weekly chart. But again, that is a weekly chart. So we'll just have to see. This week, as I said, we closed on really slightly below those trend lines. And so, you might not have to wait until Friday. If, let's say, by Thursday's close, somehow the QQQ has gotten all the way up, let's say up here, you're probably not going to fall back down below this level. But as of now, if we do, this is where we pretty much closed right on or below those weekly trend lines. So again, we'll focus more on that next week. Okay, a couple other things to note on QQQ. Here's the 60-minute chart. Here's a Fibonacci retracement off this reaction high right here. That's the September 12th reaction high. So we're between the 50 to 60 1.8 retracement line. You can see the levels right here. These are, for anywhere from the 32 to 61.8. These are your typical counter trend rally areas that measure. And you can also take the fib line and go right here off this recent high. That's another level you might want. Some people would put fibs. You can use fib clusters. That brings us right to the 50%. You can come down here. Fibonacci clusters will be, you go to these key reaction highs and you can add several Fibonacci levels and see if you get clusters that come in. But either way, we're down well within still what's a typical counter trend bounce range. And if we look at this, what I like to do, I did this the other day I believe in the video, I like to measure a move. Because as impressive as a rally off the lows in just 2 days, from the bottom there, that's better than 3% now, about 4%, right about 4%. And so when you take a trend line, take that trend line now and move it, and it'll tell you 2 things. The distance from top to bottom of this trend line I made is the move, and the slope, in other words, from this point to here, shows you how quick that move was made. And now we put it over here on previous moves. Almost exactly what that move was, almost exactly that move, exactly what that one was in both time, distance and duration. Um, and then right here, take from that reaction low, it measures almost perfectly to this high. Now this one took a little longer from right here, if you're following me, from this low that I put it on to this reaction high right there. So really those the three main rallies that we had in the October trading range were no different from this one. Now that one we did break out and we ended up going to the upside. But as far as choppiness and moves, this is par for the course recently. It's impressive to watch a rally like that happen in a few days, and we'll see if it builds on. But that's history shows us, at least recently, that's about the extent before you get a correction, before you get near-term overbought. So that would play into the whole thing of getting a reaction off those trend lines, also failing at the top of the trading ranges on Monday. And so we'll watch. Anything much more than that would be quite bullish, like I said, if we take out the top of the trading ranges. Let's look at SPY. As far as Fibonacci's, forget about this line. Let's take that one away. Here's a Fibonacci retracement. We had virtually equal highs here, right here. And it was really close to this one. So these fib lines are there, and it tells us or shows us here that SPY has retraced a little shy of the 50% Fibonacci retracement level with the 61.8 there. So still at this point in time, again, not that it can't build on it, but it's nothing more than just a typical snapback counter trend rally. That's all it is at this point in time. Okay, and levels to watch. Of course, there's 294 again. We're right back at it. We had a momentum fueled overshoot. I mentioned this. I put up a post. Started working on that about 20 minutes before the close. Got it out 10 minutes or so before the close, showing you this chart and some others, and saying this is a trend day. Today was a trend day. A trend day, if you're not familiar, is when the index, a stock, or the market opens up and moves pretty much consistently higher throughout the day, and to close on or near its highs. Or a trend day to the downside would be the same thing in reverse. You open, you steadily move lower, and you close on or near your highs. So with that being said, I said odds are you're going to overshoot this a little bit. 294, we're almost there. You get the buying into the close on a trend day. That's one thing about it, because you have shorts being caught off guard, and those chasing the FOMO trade, fear of missing out, will want to buy at the buy towards the close. And of course you get the index funds and everything squaring away at their positions. That happens in the last few minutes. So for all intents and purposes, and I said it ahead of time, that would be you get a marginal close slightly above or below, and that's what that is. 37 cents on a $200 security, and 294 is just roughly the top of that range. There's a couple spikes, so that's it. So we'll see if we pull back down. We've come in, we went in the trading range again, and this is where throughout the month of August and even into early September, this is where all previous advances were capped. So if we can take it back above, and then there's a potential downtrend line. Right now, see, there's only 1-2 reactions. So if we pop it on Monday, then you'd want to look for a third validating reaction there. And anything much more than that, certainly going to be near-term bullish. Oops, sorry. Flipping over to the VIX here. Finally, let's look at Mr. VIX, the volatility index. You can see these trend lines here. You look for the divergent lows, and last time we had some divergence in place back here. And so the VIX for years has been bouncing around in the support zone. You can see it labeled down here, and this is the low end support zone. And we're pretty much, last time we hit that support zone back here, we had divergence in place, and it led to this sharp spike. And so I look at these downtrend lines, and they coincide with the market too. Obviously, the VIX is almost like looking at the stock market in reverse, except you come to a floor, on the VIX each time. But what I pointed out earlier in that last post on the front page is we have this downtrend line right here, and a pretty clean uptrend line so far, and we came to close right on the back test of the intersection of those two trend lines, with some support right here. I have a support level. It's not a super well-defined support, but it's decent, about 1673. You can see quite a few reactions in there, some reactions around there and around there. It's really the top of this support and resistance zone. So it runs from 1673 down to about 1573. So that's interesting to note that at the same time the equity markets are rallying into those resistance levels I just spent the first part of the video showing you on, VIX pulled back to support. So it's pretty clear. I mean, if markets go much higher, VIX is going to break down, and when it breaks down, it usually comes back to the bottom of its trading range. Otherwise, for now, the VIX remains elevated. Hence, that's also why you have a 4% rally in 2 days, because that's the typical nature of the stock market on the up and downside. Make no mistake about it. You know, this was, you go back here, and you had, leading up to this, 4% 2-day rally, you had a drop of 4.66%, which was much bigger than this kickback rally. So, all right, so we'll see. We'll have to pick it up next week. Like I said, pretty much closed right on the back test of those trend lines, and so it's anybody's game next week. Bulls want to get the markets back above the daily and weekly trend lines, especially on a weekly close. Bears want to see a rejection on this back test, and then more importantly, or as importantly I should say, next step is to take out those 40-week exponential moving averages on QQQ and SPY. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great weekend.